All right, so coming into 2025, China was mostly seen as a basket case, right? Look at this. Foreign direct investment was fleeing the country. I mean, it left the country last year and it was been coming down for a long time. Late in the year, also, remember that so-called stimulus, the bazooka? I lost how many times they've used it, but that rekindled interest in their stock market, especially the big tech names, which, by the way, never recovered from that clampdown from President Xi. And still, even that sort of has lingered a little bit, right? But China has other issues that can't be solved overnight with money printing. The wealth divide is absolutely enormous. Rural China is just completely shut out, left in the dust. Think about this. 600 million people living off about $140 a month or even less. Of course, there's the fertility crisis, which is even more acute in those wealthy areas of the nation where all the money is being made. But I got to tell you something. Lately, the American media has been cheering China's position in the trade war. Reports of tariffs causing harm to China's economy, even like Goldman Sachs, suggesting 16 million people are often greeted with a shrug of the shoulders. I mean, think about this. We've even begun to romanticize the long march, right? This is, of course, when Mao emerged as the leader of communist China. Listen, we talk about their ability to be agile and willingness to dig in and for as long as it takes. And I get it. That was what this was all about. My next guest actually had a compelling post on the notion that China's position to ride this war out as long as it takes. I want to bring in now Kao Family Office CIO Michael Kao. Michael, you know, this post, we're going to put this post up here and share it with the audience. It's rather long. The two areas, of course, that stand out, you say, hey, listen, as I am a Chinese by descent, I get the whole angle of China national pride being able to eat bitterness and endure hardship, but math is math. Let's start there. What are you suggesting?
Well, thank you for having me, by the way. Very happy to be here. So what I'm talking about in terms of the math is that, look, at the end of the day, the U.S. consumer consumes 35% of the global total consumption, global consumption. And as far as the trade numbers go, China exports $450 billion to the U.S. That accounts for roughly 2.5% of its GDP and about 15% of its exports. The U.S. exports about $150 billion to China, and that's about 0.5% of our GDP and about 5% of our exports. The reality, though, is that the Chinese surplus with the U.S. is actually far larger than that, because when you look at the other 10 to 15% that it exports to Southeast Asia, and those countries in turn run trade surpluses with the U.S.,
right,
you can pretty much double the numbers, right? So their export economy. See, Charles, at the end of the day here, what we've got is a very warped version of globalization. Globalization was meant to be based upon comparative advantage between countries. If you're a better fisherman than I am, and I'm a better peanut farmer than you are, then we trade, and basically 1 + 1 = 3. That's not what we have.
Right.
China has a top-down investment-led business economic model, I should say, that for 40 years has been predicated upon urbanizing its population based upon real estate development. Well, as you and I both know, that jig is up.
Right.
So it's now turned its attention to what I call its runaway assembly line, its industrial capacity. And its runaway assembly line cannot stop because it's the only way that the CCP can keep its restive masses employed. So that leads to grave trade imbalances with the rest of the world, and it's even worse than that because China, as a big adversary to the U.S., has targeted specifically what I call these critical path industries that have made us critically dependent in areas like chips, drugs, energy, right, minerals, ships. So that's the crux of the matter here.
So the other part, though, of this post, though, at the end, Trump 2.0 needs to provide a face-saving exit strategy for China, and Xi needs to take it. What would that look like?
Well, I think you're already seeing it floated a little bit with President Trump talking about maybe going down to 80% or 60%, and I think it's kind of funny because he gets a lot of critique over caving and trading against himself from 145%. But, if 80%, maybe 2 months ago would have been considered just total shock therapy now, right? And now somehow 80% is perceived as de-escalatory from 145%. At the end of the day, what I think happens is that these critical path industries need to have longer term sticky incentive modifiers, right? So probably in the neighborhood of 40, 50, 60% tariffs in these critical path industries. But do we really need to have, punitive tariffs on what I call T-shirts and tchotchkes? I don't think so.
Right.
So I really think that, if I were advising the administration, that's what I would be advising. I would say, you know what, trade some of those T-shirts and tchotchkes tariffs, take them down to zero or near zero, but we need to stand firm on the areas that are important to our national security.
Michael, I got less than a minute to go, and believe me, I wish I carved out more time for this conversation. The onshoring, I saw in one of your notes that you've spoken to, to CEOs, retail CEOs. This was considered a big deal. We were cheering this, right, not long ago in the fourth quarter of 2023. We were happy about it. And now the media has kind of turned this around as well. We can't do it. It takes too long to build factories. We don't have the manpower. I think the other part of this equation is not just how we, push back against China, but how do we take advantage of it in this country to maybe rekindle some factories?
Yeah, I think that it has to be a combination of proactive industrial policy, as well as some of these tariff, what I call these long-term incentive modifiers, because as we saw, the CHIPS Act, was actually an example of proactive industrial policy, but it alone wasn't enough. So I think we need to create long-term incentives to harness the power of private industry to want to reshore here. That's the fundamental crux of the situation. That's going to take time, obviously. It's not going to happen overnight. But I believe these targeted tariffs in critical path industries are a pretty good first step to creating those long-term behavioral changes.
All right, Michael Kao, like to bring you back real soon. We'll see what happens this weekend. By the way,
Thanks
just 30 seconds to go. How will we feel Monday morning after this meeting between Bessent and his counterpart?
Yeah, that's a good question. I'm not really holding my breath for any fireworks to happen over the weekend. I think this is going to be like a meet and greet, and the fact that we're talking is a good thing. So we'll see. I do think that other countries will get resolved far sooner than China.
All right. Meet and greet, we'll take it at this point. Thank you very much. Really, again, appreciate you. Always been an admirer. Talk to you again real soon.
Thank you for having me.
See you.